Hello, it's Adil bringing a review of the FTSE 100 for the week ahead commencing the 18th of May 2015. Okay, start with fundamentals first of all. Post UK election victory, the actual market has given us mixed messages to a large extent. The economic data has started to slow down from a UK's perspective, has been with regards to the data on Thursday and Friday relatively weak, although we did have a stronger reading earlier in the week, which was pretty impressive. But overall, from the FTSE's perspective, the rally certainly has weakened. Even though the dollar index has certainly fallen, which in theory should be helping the FTSE 100, but has failed to propel it higher. So if I just bring up a chart of the dollar index, as you can see here, the H&S formation is underway of the dollar index. The next level potentially will be the 200 MA below, and we certainly are in a bearish phase, which in theory, based on the FTSE 100, should be bullish. But given the fact that the US data is relatively weak, also the European data has started to come out weak as well, which is a concern, especially with regards to Germany. Although the French GDP was impressive, and nevertheless, it certainly doesn't spell a good in terms of growth going forward. Okay, so we also have the Chinese markets as well that are relatively weak on the Friday, certainly closed weaker this week as well. If I just bring up the Asian markets first of all, I mean the emerging markets certainly have stalled. Okay, we seem to be putting in a lower high here on a daily chart for emerging markets. If I actually bring up the Asian markets, okay, I'm just going to bring up the Nikkei. This is the Shanghai. So Shanghai was an inside bar. So last week we had bearish engulfing candle. This week we failed to take that out. So that's relatively negative. Also, the fact that we put in a potential double top scenario as well with regards to Shanghai needs to be watched. If we can take out this high and propel higher, then yes, global markets will certainly start to move higher. But given the fact that the situation in China, obviously given the imports exports data, we had other information as well this week, relatively weak on the weak side, given the fact that yes, we've had the rate cuts, but how that to a large extent has been factored in, with the Shanghai obviously up by almost 50 to 60%. So the Nikkei now, okay, bring up the chart. The Nikkei, again, the Nikkei has the unfilled gap above, but as you can see here, we have a lower high. Okay, and what we're doing here right now is basically a bear flag. Okay, so you have a bear flag scenario, so you can even call this a H&S formation. You have your left shoulder there, the head obviously has gone in, we're creating this right shoulder as we speak, and then obviously the market's going to move lower. So the Nikkei itself remains relatively weak. The Shanghai certainly seems to be exhausted, so the Asian markets are going to fail, but certainly are failing to propel the markets higher. And then obviously we are familiar with the German DAX. Now if I bring up the chart of the German DAX, given the fact that the economic data there has started to come out weak now, and the daily chart, as you can see, has H&S formation with a target of 10,900 and remains in a bearish trend. Okay, it's in a bearish channel, and that channel certainly is being respected. It remains below the neckline on the H&S formation, and as I've shown you already, the Asian markets are weak. The European markets, given the fact that Germany is a leader, are relatively weak as well. If I just quickly bring up the chart of the S&P 500, of which I will be going in and doing more analysis on the S&P, you can see that the S&P 500 is also into resistance as well. So there's no real catalyst to propel this higher. Now the jobs data did come out stronger on a Thursday, but the economic data today was certainly dire, or should I say Friday was certainly dire. So nothing really to be excited about in terms of the actual economic news flow supporting growth and allowing the markets to certainly stand on their own feet. Okay, so I mean you can just go through a glance of the economic data. We can go through it quickly with you. Now Friday's economic data itself, as you can see here, I mean the state empire manufacturing index lower than expected. You had the industrial production lower than expected, the capacity utilization lower than expected, CB leading economic index lower than expected, the consumer sentiment Michigan lower than expected. So the economic data out of the US hasn't supported or isn't supporting any real move higher. Yes, one could argue that the weaker dollar will then obviously cause interest rates to be pushed back, and if interest rates are pushed back, the argument is that you buy into the market because interest rates will remain low until next year. Okay, well that's the same thing that Mr. Carney said earlier in the week, and that technically should have given the markets certainly some reprieve, given the fact that he did push interest rates back to mid 2016, but then he subsequently came out the next day and was hawkish again. If he was so dovish, then why hasn't sterling collapsed? Okay, so I'll bring up a chart of sterling, GBP USD. Here we go. So as you can see here, it's a stellar move higher. Okay, a very, very impressive move higher, and realistically, I mean, one could even argue on a daily chart that we have a very strong case for an inverted head and shoulders formation. So there's your head, your right shoulder's gone in, and obviously we're starting to propel higher, and this could go even higher. So given the fact that even though he states that the interest rates have been pushed back to mid 2016, the path of sterling certainly remains higher because interest rates are going to go higher in the foreseeable future. Okay, so that's the situation that we find ourselves in at this current juncture. Okay, so his article on I think it was a Thursday or a Friday, the economic data he was very hawkish in terms of stating that the next path would be higher. So the way in which it seems, same thing with regards to the Federal Reserve as well. They're psychologically prepping the markets to accept that a rate hike is coming, so that they can include that in their model, but give them ample time to include it in their model, thereby reducing any risk of a fallout, okay, or any major catastrophic sell-off. Okay, so it's all about adjusting expectations, and that's what they're doing. They're giving messages to the market, giving them ample time to maneuver accordingly. Okay, so that's the situation that we find ourselves in. So a stronger sterling obviously is negative for exports, and that's one of the reasons what's weighing the FTSE 100 down and not allowing it to propel higher even with a weaker dollar. Now bring up the commodities. Excuse me. Excuse me again. Okay, so bring up the charts for commodities. Bear with me. Okay, crude oil. So crude oil, even with a weaker dollar, it certainly is struggling here. Okay, so the excess supply certainly is weighing on the actual commodity itself. So this is a double top on the 4-hour chart, not exactly bullish, hence the reason why the FTSE is certainly under pressure. We are into previous resistance equals support for now, so let's see how long that holds, but it certainly doesn't look promising. We have held this support level down here. Okay, so this is basically where we stand. So the situation in terms of economic growth certainly isn't there to support the oil price moving higher, even though a weaker dollar is certainly supportive. So given the fact that you have excess supply, hence the reason why you're seeing this pressure on the downside, and that's why the FTSE 100 certainly seems to be pressured as well. Let's just see bring up a chart of copper. Okay, copper. So copper certainly has had quite a stellar run. Okay, it's consolidating here, so whether or not this can either create a bull flag scenario, which is very hard given the fact that economic data is relatively weak, the copper chart certainly does look as if it wants to push back and retest this diagonal trend line. Okay, that's basically where we stand given the fact that previous support equals resistance, and that's holding thus far. Okay, so let's go to the indices now, given the fact that the overall or overwhelming theme is number one, weak economic data, especially from the US. Obviously we're all familiar with China. We have the situation in Greece now. Just over the weekend, or I think it was last night, Greek PM says won't back down from red lines in EU IMF talks. Mr. Tsipras said on Friday his government would not back down from its red lines in negotiations with foreign lenders, but said a deal must be reached soon following months of talks. Well, I mean, if you're not going to back down or you're not going to adjust, then how is a deal going to be reached? It's back to square one. Athens is fast running out of cash, and talks with European IMF lenders are on the more aid have been deadlocked over their demands for Greece to implement reforms, including pension, blah 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 blah. Tsipras said the two sides had largely agreed on fiscal targets and VAT rates, but disagreed on labour issues and pension reform. Okay, so the deal must close. There is no doubt about it. I think we've been hearing that for the last few months now. Earlier on Friday, the finance ministry said Greece had paid public sector wages due in mid-May, confirming scheduled payments as the country struggles to stay solvent. Although it may find it harder to meet our wage and pension commitments late this month, as well as debt payments due in June. Okay, so they're certainly running out of cash, but they're remaining stubborn, and I still can't see a breakthrough as of yet, especially with an article or a headline like that says won't back down from red lines and EU IMF. So basically the crux of the matter is that the uncertainty from Greece certainly remains. Okay, so you have the uncertainty from Greece, you have the weak economic data, you have obviously those two combos put together itself are weak. We have the Asian markets that are exhausted now and are weak. So where will the rally come from? Okay, even though Mr. Draghi did claim that his unlimited QE speech did trigger off a short squeeze in EU equities, but that didn't last. So we also have a stronger euro as well, because remember the whole market is moving off the euro. Obviously the bond has come into contention this week, or the yields globally have come into contention, because when you have a rising yield environment it becomes very bearish for the stock market or the equity market, and that raises a lot of concerns as well. Okay, so this is the conundrum or the situation that we find, because the bonds are selling off quite substantially. So this is another conundrum. So that's causing the euro USD to propel higher, and that in itself is a risk-off scenario, because a higher euro obviously drags on exports in the European markets, and that's obviously negative, net negative for the markets globally, especially due to the QE nature. Higher euro negative, lower euro positive. So that itself is another fundamental factor, and that's weighing on the markets as well. So all those combinations put together, let's look at the technical setup now from the FTSE 100 perspective, bearing in mind those issues that I've highlighted earlier on. Okay, so I always like to start off with the volatility index and see exactly where we are with regards to that. Okay, so volatility index. Okay, so far we do have a potential here for a bear flag, and that certainly needs to be obviously remain open to that. Okay, so this is a scenario that we can see here, consolidation. Obviously we've hit the 200 MA, and then we're looking for a move lower, which in turn will help the FTSE 100 higher. Or alternatively, that this support zone here will hold. This is just consolidation for the next move, potentially higher as well, given the fact that Asian markets are down, US markets are into resistance. Okay, weak economic data, Greece situation still ongoing. All those factors put together can create a risk-off scenario. Okay, so again, two potential possibilities, and we remain open to both. The FTSE 100 now. Okay, let's bring up the FTSE 100. And we look at the all share first of all. Okay, so FTSE all share. The all share index itself had a bull flag. The bull flag certainly has run out of steam from my perspective. There's no real commitment here, or no real follow through thus far. When you have a failed bull flag, then it generally indicates a bear flag, and the situation basically warrants that this market will obviously collapse and move lower. Okay, given the fact that we have tested this trend line and we have held thus far, we seem to be going into a potential symmetrical wedge type pattern. Okay, so a symmetrical wedge there, and the market's just coiling whether it breaks out to this on the upside, or whether or not obviously it breaks out to the downside. We remain open to both, and we don't have any inherent bias. Okay, so it's what the market wants to do, and I'm happy to adjust. You do have an argument here for a bear flag scenario, so you have consolidation here within the red candle, and then obviously the market moves lower there. Okay, so that's basically what we're looking at from that perspective. So consolidation, and then obviously a sell-off on the way down. Okay, so that's basically what we're observing as well. So two scenarios are either a breakout higher, which obviously will be led by US markets, given the fact that they are the most bullish out of all the markets at this very current junction. That's mainly because of the weaker dollar. Obviously it's helping the export side of the equation there. Okay, given the fact that the European stocks certainly are languishing and certainly remain behind. So its currency was in full steam, folks. Okay, whoever can depreciate the currency, the equity market will rally, and vice versa. Okay, and also interest rate expectations as well, especially from the US. So if you have a weaker dollar, interest rates get pushed back, and obviously the equity market likes that. Okay, so that's the situation on the FTSE all share. Let's just go to the FTSE 100 now. FTSE 100, if I go to a daily chart first of all. Okay, so again, This was a conservative candle victory. The markets obviously had a stellar rally until they hit a resistance, and then obviously subsequently we've had the sell-off ever since. Now, again, two arguments: either we have a bear flag, we break lower and hit this 200 MA below. Okay, that would obviously mean that the Asian markets continue to sell off, and the US markets certainly hold resistance, and certainly you start to reverse and move lower. Okay, and this bear flag scenario certainly plays out, given the fact that commodity markets move lower. The dollar itself moving lower in itself is based on weak economic data, therefore it depresses the equity markets. Okay. Also, like I said, the Greece situation still remains in the background. The Ukraine-Russia situation could certainly flare up again. The Middle Eastern situation certainly could flare up again, especially with Ramadan coming up. So again, that's going to cause some geopolitical uncertainty. And like I said, the bond market itself has highlighted concerns, and that could permeate and obviously feed through into equities as well. At this current juncture, like I stated, you have a bear flag scenario, although you have held this green candle. Given the fact that we did go back and test the lower body of this green candle not once but twice now, and that 6886 level has been held like a rock, that has to be respected. If that were to break, then all hell will break loose, and we are testing the 200 MA next. Okay, so you're looking at support here and support here, so we remain open to that. Alternatively, we could just consolidate here, and this may well be the move that everybody's expecting on the weekly chart. If I go to the weekly chart, as you can see here, previous resistance is holding, and you have this bull flag scenario on the weekly chart. Okay, so again, you have to remain be open to both scenarios. Whichever way the market wants to go, you go. Don't have a preconceived judgment, or don't be stubborn in any one direction. Okay, so remain open to both, and this is why I like to day trade, because I don't really have a bias. Okay, when you're swing trading, you're stuck in a bias, and that's the worst thing in the world from my perspective. I prefer to be a day trader, in and out, and always be flexible, and I'm more than happy to adjust my bias. Okay, so that's the FTSE 100 on a daily chart. You're familiar with both potential scenarios. The FTSE 250 again, very impressed the fact that the FTSE 250 has pushed high, even though obviously sterling has pushed higher. That's certainly very, very impressive. We have pushed higher, and the bull flag certainly seems to be in full swing. Again, if I go to my weekly chart, you are in this bullish channel, which certainly needs to be respected. The inverted head and shoulders based on this continuation pattern is around 17,800. We certainly have hit the inverted head and shoulders pattern now, and certainly are looking for a potential exhaustive signal. Okay, and sterling rally may well be it. Okay, so daily chart, very, very impressive. One has to respect that. If I go to the 60-minute chart, again, this topping tail here will be the key resistance level. Okay, and that will be the test with regards to the market holding or not holding that resistance zone. But for now, certainly is into potential resistance on the daily and the 60-minute chart. Now going to the FTSE 100, go to our 60-minute chart of the FTSE. Okay, so the 60-minute chart of the FTSE 100, we certainly seem to have held a 61% fib, so that certainly is bearish. Okay, so again, the 200 MA will be your benchmark, 7010. That's your solid benchmark, and we'll see whether or not that level certainly remains held. If we do break a push higher, then obviously we have this 7060 level, which is this diagonal trend line here, and horizontal resistance around the 7050 level. So those are two areas certainly to watch going forward. Okay, we could have a potential scenario here where we basically, we're in this zone here, so whether or not this is some form of bear flag scenario, just consolidating here for a next move lower, again, I remain open to that. No inherent bias. Okay, so certainly needs to be respected. Okay, so for now we're in this zone, or we're in this channel. Whether or not we could put in a lower high and create some sort of head and shoulders and obviously start to flush lower again, that certainly needs to be contemplated as well. But for now, this bottoming tail here, certainly signal a potential low for now. And obviously we've got this horizontal support here as well in this zone. Okay, so 10-minute chart, the inverted head and shoulders formation is still there. 7030 was a target. We got as high as 7010. So certainly have to pay respect to that for now. I'll get rid of that to potential pattern. Okay, so at this current juncture now, what we're looking for. Okay, so you have this and this. Okay, so we're into this horizontal support zone here. Okay, horizontal support here, and 6940 will be your key level of support. That certainly has held well. Okay, and any potential move higher we're looking at from a fib perspective. If we do thrust higher, then you're looking at 5061 potential thrust higher on that side, and obviously you've got resistance levels in that zone. Okay, so that's one of the reasons why I took a long trade with subscribers at 6942 to go long, and I closed it for plus 22 on the upside. Okay folks, so that's the situation or scenario with regards to the FTSE 100. Know your support levels, know your resistance levels, realize that we are in a zone. The key levels really will be 7050, and obviously the support levels below at 6890 and then at 6820. Again, I'm not really going to have any real inclinations as to which way we should go, but given the fact that Asian markets exhausted, German DAX remains bearish, even though Mr. Draghi's QE limited speech failed to propel or keep the markets afloat, and the euro itself is pushing higher, although it is coming into resistance with regards to the euro. But I'll discuss that from the European equities perspective. My bias concluding this is, provided we can hold that pivot low at 6940 on the FTSE, then we should start to propel higher back up to the 7000 level. Also, provided that the bond market, the bonds can hold that support level, start to move higher, force the yields lower, force the euro lower, which is going to be very hard given the fact that US economic data is very, very weak. So we do need some weak economic data out of the eurozone, whether or not Greece provides that, or whether we get some stronger US data that basically puts into question last week's economic data. It's going to be very hard to envisage that. So again, it's a game of fundamentals. Okay, that's basically what I'll state. It will be a game of fundamentals, and I will react day in each day. Those of you that obviously are watching this video, you can join the swing trading service, which is for free. You just need to send me an email. I'll add you to that WhatsApp group. Or alternatively, if you want to educate yourself and learn and study my setups and analysis that I send out to subscribers on every trade, then you can certainly sign up to the live analysis service. I charge £50 a month for that, and that gives you entry, exit, stop loss, obviously trade management, risk management, etc., commentary, my take on the markets, charts, etc. Everything is sent via that. So again, that's something that you can subscribe to. If you click on live analysis service on my website, it's a short video explaining how it operates, and I explain how I operate as well. All you need to do is payment on live analysis service. You can make a payment here with my bank details, etc., or you could take the 2-week trial by sending me your email address, or email me with your mobile number, and I'll add you to the WhatsApp group for 2 weeks. Okay folks, so risk on, risk off, wax on, wax off. Goodbye now.